All right, all right. I was just giving everybody a few moments to get in. I know we're on broadcasting on Seeds TV, but this will also be reposted on the Constructive House channel. I did want to go live so we can dive into things. I know most folks on Seeds TV typically get the audio books to help out with those who are, students or those who are just actively seeking knowledge. But with seeds, we do sow seeds in all areas of activity. And today we're going to be diving into the mortgage banking activity, primarily economics, but we're going to dive into redlining as it pertains to how it was established, maintained, expanded, and we're now in the refinery phase of redlining. And I did want to dive into it so those who are looking to buy homes or looking to get some relief as it pertains to refinancing or any type of relief programs, kind of seeing where this got started and where we are with those things now. But we do want to go ahead and jump into it. So, just to kind of break down redlining and the history of redlining. More importantly, how it pertains to the history of redlining in Jacksonville, Florida. We'll be going city to city and unpacking it through a series that I'll be calling the Neighborhood Watch. So if you are subscribed, you can go right on the playlist option and take a look at the playlist. And you'll see the Neighborhood Watch. Also, go ahead and follow our other channel, the Constructive House channel, so you can get all the inside scoop on mortgage banking and banking and finance information. So definitely take a look there. But you've seen the thumbnail, you've seen what's going on. So we will be diving into the hidden history of redlining in Jacksonville, Florida, and how it was established. And most importantly, how it is still being maintained, expanded, and refined today. So you'll find here some hidden gems, maybe some things you already knew about, maybe some things you did not know about. But we're gonna address all questions you may have, and we, as always, encourage you to be in question mode whenever you get any information. So don't just take my word for it or anyone's word for it on media, online, on TV, but do your own research. I'm here to sow seeds so you can go out there and find the information for yourself. And the best way to get answers is to make sure you start off with asking questions. All right. So I'm sure question number one that some may have, some may not be aware of, some may already know, but what exactly is redlining? And just to kind of get into the establishment of it, um, the Homeowners Loan Corporation, which was established in 1933, nearly 100 years ago, they actually partnered with the Federal Housing Administration, which is the FHA, to establish a new loan program which would allow the homeowners at that time who typically would get a 5 or 10 year mortgage, it would allow them to extend their mortgage time frame to 25-year mortgages, which would in return lower their mortgage payments as they were coming out of the Great Depression, where money was very tight. Everyone was pretty much in poverty stricken terms. So the government laid out a program called the New Deal, which was led by the president, by the President Franklin Delano Roosevelt, and they set out a New Deal to help give homeowners relief, but also to stimulate the economy. Because if your earnings and wages aren't going directly to the bank, directly to your mortgage, you can spend it in other areas, like transportation, healthcare, food, gas, you name it. You can spend them on other items as opposed to your whole paycheck, all of your wages just going towards you having somewhere to stay. Now you can spread that money around other areas of activity, which should in return stimulate the economy. However, there was one small problem with that. It sounded like it was a very good idea. I mean, when you say it, it sounds great. Like, hey, it's a win win for everybody. The economy gets stimulated, homeowners get some relief, right? But here's the problem, that wasn't set up for all homeowners. That's the problem. So I want to take a look here at something, if you all don't mind. Um, let's take a look. All right, so and just give me a second because we do want to address some things that weren't accurate as it pertains to the New Deal and the HOLC, Homeowners Loan Corporation. So, as it pertains to redlining, I know some people may have that question, and I promise you I'm going to get to explaining it. But the Merriam Webster or mortgage banking definition of it is the practice of denying homeowners or borrowers access to credit based on their location of the property that they're looking for, but most importantly, based on the way they appear. So if you appear to be non-white, most importantly black, then they would designate you as a disadvantaged neighborhood or hazardous. And they created maps with a red line on them that actually determine and dictate who's in a hazardous area. Those would be the ones who are inside the red line. Who's in a affluent or the best area. Those who are in a still, aspiring area, and those who are just playing out not in the right spot at all. So when we break it down, you'll see that that's something that's still ongoing today. It's not something that has changed. It's not something that has gone away. Although there have been laws and guidelines that have changed that's supposed to be in favor, through the Equal Credit Opportunity Association, through the Fair Housing Administration. But as we see that it's usually something that's just stated, hey, don't do that anymore. But when you break it down, you see that as long as it's in writing, don't do it anymore. The banks are good to go. Nobody has a problem. You're well within your right to break the law as you see fit, which we'll get into some of the law breaking as it pertains to redlining here in Jacksonville, Florida. Because you'll see that there was a case about 2023 with Ameris Bank who actually had to settle, and they gave him I would say more a slap on the wrist, but they told them they had to make some changes around here as far as it pertains to redlining and discriminating on homeowners, which has been a practice that's going on through all cities in the country, but a practice that's been going on in Jacksonville since 1933. And I'm sure if I dig even deeper, we'll see it's been going on before then, but I use this year as a timestamp because that's when the government got on board with it. And by that I mean the president, who is the pretty much the leader of the homeowners loan corporation, and they hired examiners to go out and work alongside of mortgage loan officers, appraisers, and realtors to create maps that they call residential security maps. And those maps were set up to with a map legend that pretty much said, "Hey, these are where the black folks and non-white folks live at, and we're going to ensure that moving forward they don't get a piece of that pie." So they made sure that they stayed in what they called hazardous spots, and that you're not going to be able to get any sort of wealth accumulation through home ownership. In fact, they began building all sorts of factories in those areas, waste centers. They made sure there was no health opportunities as far as healthy groceries, but they had no problem putting like your oil refineries and all sorts of hazardous waste um, centers that just dump right into the rivers right next to their houses with no avail. They did that over and over, and it's still going on today. And we'll be diving into that. But that all started from the maps that were created by the Homeowners Loan Corporation, headed by the government, and they partnered with the FHA, Federal Housing Administration, to get the job done. They partnered with them. So everyone's culpable here. And it's not about pointing fingers, it's about pointing out the truth. So they all were culpable here. And I got the proof to back it up. And I am going to let you guys see the maps so you can see what's been going on here. and how that has actually impacted what we have going on today. So I'm sure you may see the illustration. Well, let me share the screen again real quick so you guys can see the breakdown, because I do want to make sure that it's not just me telling you anything, but that you actually can see the truth and the receipts here. And we'll also break down the Ameris Bank case. I'm not sure if I'm going to go over the entire court document. I believe it's like 22 pages, so it's not extremely long. And whenever it pertains to any sort of racial discrimination against blacks, it tends to not be that long or not that much in detail. But we're here to provide the seeds of truth. Like I said, it's a constructive house channel, so we do want to make sure that we are being constructive as well. But let me see if I can share this with you here. Because one thing I want to go over is the map legend, so you guys can see that and know what I'm talking about. Because I'm an audio and visual and hands-on learner. I'm sure some of you may not be, but I like to see what I'm hearing, be able to touch it. So here you go. All right, here was the map legend from the Homeowners Loan Corporation. As you see, grade D was designated as hazardous. All right. Grade C, what you see in the yellow, is definitely declining. So any area that you see in yellow on the map that I'll be putting up here in a moment, those are areas that they say are definitely declining. The slang term of it will be white flight. These are where, the whites were fleeing because there were, more blacks who were getting more income, who were going to certain cities, getting jobs of equal pay to an extent, and moving out of those quote unquote hazardous areas. So you started seeing the definitely declining. And this was how they helped FHA, who was providing that relief, who was going to provide those new loans to the banks. Because what they would do is purchase the loans from the banks, the government. This is what the Homeowners Loan Corporation was supposed to be doing, to give the banks a bailout. They would purchase those defaulted loans, all the homeowners that were going into default, going into foreclosure. They help the banks out so they're not losing all their money. They go bail them out, give them a new program to offer the homeowners, which was at the time extending their loan term from what was traditionally, and we're going back to the 30s, was traditionally a 5-year or 10-year mortgage. They would extend it 25 years, which would lower your housing payment significantly. And it allow you to, in some instances, buy another home because you have a lot of freed up money. Now, of course, you are tied into a 25-year loan payment, but think about if you move and you're renting that out. Well, the renter's paying that, so you don't have to worry about it as much. But those options were not offered to anyone who was in the hazardous grade. Anyone in red, they weren't offered those opportunities. And the maps were designed and set up to ensure they knew who and who not to give that relief to. Keep in mind, we're going back to the Great Depression era. However, you'll see when I bring up these maps as they appear today that those hazardous areas are still hazardous. And those areas still have low property values, still get least favorable terms, still are being avoided by realtors, appraisers, and mortgage loan officers. That's still going on today in 2025, nearly 100 years later. Nearly 100 years later. But back to the map legend, grade B, as you'll see, is in blue. It's labeled as still desirable. Grade A, as you'll see in green, is affluent or best. That's the best. That's the best. So let's take a good look here in Duval County, and let's see what their maps are looking like. All right, as you see, I still got the legend pulled up. A for best, B for still desirable, C for definitely declining, and D for hazardous. And this was the map that the HOLC used back in 1933. This was their map. Um, as you'll see, you got the Sugar Hill District. The Sugar Hill District is no longer existing. And they have them listed in the red zone, which is very peculiar to me because the research I've done on the Sugar Hill neighborhood is that that was actually where affluent blacks lived at. Your upper middle class blacks actually built that community at that time as a response to the Riverside community, which was affluent white side. So at that time, they had a lot of, like I mentioned before, blacks who were actually getting some of those higher paying jobs, some that own their own businesses, some that were, upper management. They had a community called Sugar Hill where there was nice houses, there was folks with money there, but they still labeled that as red because they didn't want them to get that relief. They didn't want them to get that relief because then they can start getting into those green zones. Then they can start getting into those still desirable zones, as you see the blue. And as you see, the green areas are nowhere near the red areas. So they make sure they separated and segregated you just fine. And this is how they drew the maps at the time. Now, a neighborhood that is still in the hazardous zone today, Moncrief, it, almost 100 years going, has been labeled a hazardous community for almost 100 years. It's still in the red zone today. And as you see on this map created by the government in 1933, they were deemed a hazardous zone even then. Even then. So this is a map, and I'll see if I can maybe blow it up for you all. But this is a map of what the Homeowners Loan Corporation drew up to encourage and use as a tool for discrimination with housing, which is supposed to be your greatest way or easiest way to accumulate generational wealth is through home ownership. Well, they drew this map up to ensure that those who are in these red zones don't get that opportunity to generate any wealth because they didn't let them get any financial relief through the New Deal from President Franklin Delano Roosevelt. So they were all in cahoots with it. They were all in cahoots with it. So let's take a look here at that map. So let me see if I can get it blown up a bit. I'm not sure, but we'll take a look. But while we're doing that, why don't best to, take a look at the this article that I was looking at, and I do want to give credit to them because they did help me with a good deal of this research that I'll be bringing out today. Um, let's see. All right, let's take a look here. All right, so introduction to redlining. What is redlining and how it impacted Jacksonville, which is what we're discussing today. Jacksonville. And as you see, they got clips of the same map because it's now been released. These were things that were closely guarded, especially at that time, because they were actively practicing discrimination. Now, keep in mind, this was at a time where they still had whites only signs up, colored bathroom signs up. All that was up then. So it was a different, time. However, not so much different when you look at the maps of today. It seems like they just took the signs down, but they're still practicing these same things. And the Ameris Bank case that we'll take a look into will show you that they're still practicing that here in 2025. Like I said, nearly 100 years later. All right, so just a brief introduction. For more than 20 years, the LISC Jacksonville has been committed to transforming Jacksonville's most challenged and underserved core neighborhoods into healthier, more sustainable communities. I mean, that's what they say, but I go by the method. Don't tell me, show me. So just going down here a little bit as they're also explaining what redlining is. Like I said, it's the practice of discriminating on consumers based on where they're at. And during the Great Depression, like I said, the U.S. government created the Home Ownership Loan Corporation, and that was to help Americans purchase homes and stimulate the economy. So I already went over that, which I just believe it was more so confusion by illusion. They gave the illusion that it was a good thing, all the while behind the scenes, they were setting up maps to ensure that blacks and non-whites didn't get a piece of that activity. They didn't want you getting none of that action and getting some home relief on your mortgage, where you're struggling just like everyone else, you're working hard just like everyone else, but you don't get that relief like everyone else. All right. So neighborhoods across the cities in the country all face redlining maps. They all did. And these are the maps of inequality, is what we call them. the maps of inequality. Um, in Jacksonville, redlining was implemented around 1937. I guess that's when they decided to start making the move. They went city to city. Like I said, they would get the organizers for the HOLC, and the organizer would meet with your loan officers, the banks, the appraisers, the real estate agents, and they would draw the lines up on the maps, create these maps, and ensure that if you're in a white affluent area, you're good to go. If you're not good to go. You don't get that relief. You can struggle for another 100 years, as we see here. But these communities, especially in Northwest Jacksonville, like we pointed out, Moncrief neighborhood, they still feel the lingering impacts of that today. Their property values, as you see here, in those neighborhoods plummeted, while neighborhoods such as Riverside, that community, actually got what was owed to them, as you see right here. Let me see if I can blow this up. Let me see if it'll let me blow this up. So let's take a look here. The $1 million suburb, and they're more so speaking on the Riverside community. Look at the article. This is from way back then. Buy a home or home site here. It will mean much to you someday. We are planning to build 1,000 Riverview homes. We have large commitment from the United States government through the FHA for the next 10 to 20 years to pay. We're preparing to meet the great avalanche of visitors and investors who ever visited Jacksonville and Florida. The big parade is on the way. I mean, they're celebrating discriminating against you. Is that not crazy? We present here on the double face sheet a representation of America's greatest opportunities to the intelligent Caucasian race to own a beautiful home, tax-free home up to $5,000 on a 10 to 20-year plan to suit the purchaser, or an investment in a few home sites that should double in value in the near future. They put it right in your face that, hey, here's an opportunity for the intelligent Caucasian race to own a beautiful home right here in the newspaper. This is in the newspaper in Jacksonville in 1937. And they didn't say for all people. Right here, as you see, it's underlined. The intelligent Caucasian race can get a tax-free home up to $5,000. And no, not like everybody else, not a 5 or 10 year mortgage. You can get a 20-year mortgage, a 25-year mortgage, but only if you're an intelligent Caucasian. That's what this newspaper article says. While they have the FHA co-sign them in the article, a co-sign from a government sponsorship. I mean, you can't even make this up. It's right here. It's right here in black and white. So when redlining took effect 7 years later, the practice further legitimized and perpetuated the existing racial segregation in housing by reinforcing at that time legal tools such as racially restricted housing covenants. So if you've ever gone to some of those communities where it says deed restricted, so there are certain restrictions at that particular place. They have a home ownership association, a HOA, and historically, the HOAs would set up different guidelines. They would set up different rules that were nothing more than discrimination practices, to ensure that blacks and non-whites could not move in that particular area. So they would set up a HOA, or homeowners association. They have their bylaws, and they go by the bylaws. And most of the bylaws, especially in that time, was no blacks allowed, and no other non-whites. You're not allowed. You're not allowed to come here. We don't want you here. Primarily because we don't want you to build wealth, but also because they didn't want to be around anyone that didn't look like them. So they created, and with the help of the government, they created homeowner associations, which is very, very rampant in Jacksonville, Florida. You can see tons of HOA associations, tons of deed restricted communities, tons of them. They're all over the place. And those originally, which you see blacks and non-whites living there now, but originally those were set up so you couldn't live there if you look like me. You couldn't live there, and that came from these residential security maps, which is where redlining comes from. These residential security maps that the FHA helped create along with the HOLC to ensure that there would not be any wealth stimulation in any zone that's deemed hazardous. Now, I find it quite coincidental that the zones deemed hazardous just so happen to be majority black communities. Very interesting that the hazardous places are in the ones who did not get any relief, didn't get a lower interest rate, didn't get an extended mortgage loan term through the FHA, was supposed to be for all people, but it just coincidentally it wasn't for the ones in those communities, which just so happened to be majority black communities, most of which at that time had money to spend, and they just wanted some of the relief that the others in the A community were getting. As you saw on that article, they weren't even allowed to get. They were not included because they weren't intelligent Caucasians. And I mean, right next to it, FHA. I mean, you can't even make this up. Right next to it, they're saying the FHA helped that out. I mean, it's crazy when you think about it. It's crazy when you think about it. But these maps were created about 100 years ago. Is that not something else? 100 years ago. 100 years ago. But I did want to check something out here because as we can see these maps, which are quite interesting. Let's see. Hold on. Let's look. All right, now see, these are the zones now, right? This is still the Moncrief area. It's still red right now. Still red. All of this is still red. This is today. Let me see if I can pull up that article that I got this from. Here we go with craziness. All right, let me see if I can pull that up and let me share this because I like to go through receipts and kind of these things down. So as you see, the effects of redlining and food deserts in Jacksonville. And to all my folks that live in Duval County, I'm sure you guys can agree with this. There aren't any Whole Foods or Sprouts farmers markets or fresh markets on, I mean, there is a Publix on Dunn Avenue, but none of those things are in that Moncrief area. None of those types of stores are there. Now, there are folks that have, farmers markets and things like that, but they don't have any of those things over there. Now, the Riverside community does have a fresh market. I believe there's Sprouts like on the Beach Boulevard side of town and the south side, I think St. John's all down there, but they don't have any of those type of stores over here. So let's see what this article is talking about. As they're talking about the food desert, which is the lingering impacts from redlining back 100 years ago, and even in this article, they're still discussing it. Yeah, through the Great Depression, American government created a system known as the Home Ownership Loan Corporation (HOLC), is what we'll just keep referring to them as. But like I said, the confusion by illusion was that they would help out Americans who were struggling during the Great Depression and give them some relief as it pertains to their mortgages, because a lot of folks were struggling and going into default in their home loans, some going into foreclosure. So the president created what they call the New Deal to help give some homeowners relief on the mortgage payments. But through this system, the entire neighborhoods across the cities were categorized in maps based on perceived risk in lending. And this map influenced lenders in making decisions about where and who to provide mortgages to. And as we've seen time and time again, a common theme in America is to punish. Now they put the poor, but Sugar Hill wasn't poor at all. So it's not the poor. You see, we got to correct some of these mistakes because Sugar Hill wasn't a poor neighborhood. To punish the blacks is what it should say. There's no reason to hide it. It's the truth. To punish the blacks. Like, I don't understand why you would put the poor when that was a rich neighborhood that was deemed hazardous, even though those were affluent blacks that lived there. So we're not going to pretend and we're not going to say poor. We're not going to switch words up because that's not what it is. That's not what it is. All right. So this article needs to be adjusted if you ask me. But anyway, it's still a source of reference nonetheless. In this instance, redlining served as a huge detriment to not only poor families, but Black, Indigenous, and people of color. These perceived risks were based solely on financial and racial factors. By now, I'm pretty sure you know where this article is going, yada, yada, yada. Yeah, yeah, yeah. But the residential security maps, as we broke down the legend of the map earlier, is A, B, C, and D. All right. And all the D's are red, which where lenders would not loan at all. So wherever you see red, that's where redlining comes from. That's where lenders didn't loan at all. So if you were a family that lived in that neighborhood, even though you may have worked a stable job, you may have worked at the plant, you may have worked at the bank, you may have owned a restaurant, you may have owned a grocery store. But if you lived in that neighborhood where they drew that red line around it, lenders, which is another term for banks, um, they wouldn't lend you any relief. So when they had those loans from the FHA that provided relief to those that were going into default, those that were going into foreclosure, anybody listed in the hazardous zone was not allowed to get that relief. They would not loan you, and they would not lend to you. They would not give you a new loan for relief. But if you were in any other zone, you can get that relief. But anyone in the hazardous, which coincidentally was where the blacks and non-whites at that time and today still live at. Now, let's see. I'm trying to see if they're talking about the food deserts as it pertains to today. Yeah, here we go. Food deserts are areas in a city where residents have little or no convenient options for obtaining affordable and healthy food. Because I mean, we'll be real, they got affordable food on Moncrief and Dunn Avenue, Lim Turner. They got affordable food. But is it healthy and affordable food? And I mean, anybody who's from that side of town, from the north end, not everything over there is healthy. Tastes good, but it's probably not the best for you. And you should have options. It's okay if you want to go down to Tony's. If you want to go, to Jack's Shrimp and Fish, that's fine. But you should still have a healthy alternative when you do want to have a nice, healthy, balanced meal. And when you see a side of town that's in a food desert where there are no healthy alternatives, then of course you're going to see um, diabetes and health disorders, high blood pressure, heart disease. Of course, you're going to see that there's no healthy options when you got to drive 30, 45 minutes just to get to some healthy options. So, most folks who are already being deprived on home ownership, they're not getting any relief on their mortgage rates. Their home values are more than likely underwater, so they can't even refinance to get a lower rate to get better terms. They're struggling financially. They can't get any. Let's face it, your house is the biggest payment that the majority of Americans make when it comes out of their paycheck. And if you're not getting any relief there, you're not going to have any relief in any other areas. You're not for your car note, not for your electric bill. That relief, it means nothing if you have no relief on your house. And when you've been underserved, when it comes to your house payments, when it comes to affordable mortgages, when you've been underserved there, it's a trickle down effect when we talk about the other areas of people activity. One in particular being healthcare. And healthy foods is a part of healthcare. It's a part of healthcare. And as you see, lingering effects are right now today food deserts. Like I said, there's nothing wrong with going to Tony's. There's nothing wrong with going to the fish shack over there, to Jack's Fish and Shrimp. All of that's fine. Right over there on Dunn Avenue, I'm very familiar. All of that's fine. But you should still have options where you can go to like a Whole Foods, where you can go to a fresh market and you can get some whole food fruit and vegetables. Those options should still be there. And they're not, but they're in all the areas designated as green. That's not a coincidence. That's not a coincidence at all. That's not a coincidence at all. If you ever been to the heart of the north side, or even just across the railroad tracks, right there on Main Street, it goes all the way to South Carolina down to Florida. Main Street is Highway 17. And on the other side of the railroad tracks on Main Street, right there where it's Bush Drive, the other side of the railroad tracks is called Dunn Avenue. That's the north side. Runs into Lim Turner, Moncrief, all of that. They got one Publix over there, and it's next to a whole heaping options of unhealthy food. Whole heaping options of it. None of it. So let's see what this article has to say about it being a food desert on the north side of town. If you ever been to the heart of the north side, or even just across the railroad tracks into Mixon Town, you will see multiple corners of convenience stores. These small shops often provide a great amount of processed sugar and fatty foods that are well-known factors in obesity epidemic that America faces today. There are family homes on the north side, communities that people are proud to be from, and they rep those communities with a smile. But what do you do when your grandmother wants a home cooked meal, and instead of a Publix being 2 miles away, it's a Popeyes, McDonald's, like I said, Tony's, um, Jack Shrimp and Chicken. That's what's there. That's what's there for them. Processed foods, Wingstop. Like I said, those are good places. The food's good, but it's not the healthiest option. And what's wrong with wanting a home cooked meal with some whole foods? What's wrong with that every now and again? So there's no coincidence here. There's no coincidence that there's a lack of transportation in these areas that are deemed hazardous. There's no coincidence of healthcare. There's a lack of hospitals. You know, you got to go to the hospital on 8th Street, which for the longest was called Shands. I believe now it's called University of Florida. But there's no coincidence that all of those areas are deemed hazardous. All of those areas are deemed hazardous. There's no coincidence there. None at all. And I find it very interesting. And I do want to share this because this is what they did to my great folks in Duval County. This is what they have done, and here's what they're still doing right here. This is what they did. They drew a red line, and they got you sitting over here, and they are sitting there with the cigars and the nice fancy clothes, making sure you don't come anywhere near them. This is what's going on right now. This is what's going on right now today. All right. This is what's going on right now today. Redlining, mortgage discrimination, ensuring that you don't get an opportunity at home ownership, wealth generation. Like I said, the biggest bill and expense you'll have is going to be on your home mortgage. You're going to pay the most. Rent's going to be your highest bill. Your mortgage will be your highest bill. Housing is going to be your most expensive bill that you have. It is. It just is. It's going to be the most expensive bill you have. So you want to make sure that that's investment worthy. You want to make sure that's investment worthy. And what they did with the Home Ownership Loan Corporation was ensure that you wouldn't get you would not be able to generate wealth through housing. Now, where else could you generate it through if not through housing? Where else? Because you have to, whenever you're doing whatever it is to make money, you have to go live somewhere. You have to go live somewhere. And if that's not earning you any money, all what you're working for is null and void. It'll come to that point. And you see that when you look at these maps. You see that when you look at these maps. I mean, It's sitting right here in your face. Let me see if I can pull them back up. But it's right here in your face. They have maps where they designated that you are not going to be able to live where they want you to live, or where you won't be able to get relief. Like, you shouldn't have to move from where you're comfortable at, where your great 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 grandparents purchased that home, and you have to leave it. That's how gentrification starts, which that'll be a topic that we'll be discussing too. But that's where gentrification comes from. Once you leave and abandon what your family bought and set forth for you, then they come and swoop it in at pennies on a dollar. And it's usually corporations that are doing it, just like the Home Ownership Loan Corporation. The Home Ownership Loan Corporation got the battery in their back. They teamed up and partnered with the government and the FHA to ensure that you couldn't get your fair shake at this. To ensure that, to ensure you would not get a fair shake at relief. And we're talking about, we're going on 100 years strong when it comes to that. So, without further ado, I did want to pull up, you know, hold on. I did want to pull up the Ameris Bank situation, but yeah, just even look at their logo, Homeowners Loan Corporation. This is sad right here, man. It's sad. All right, so we got the United States District Court, Middle District of Florida, Jacksonville versus Ameris Bank. Let's see if we can. Oh yeah. Trick myself here. So yeah, let's take a look here. All right, so take a look. We got the United States of America brings its action against Ameris Bank under the Fair Housing Act and the Equal Credit Opportunity Act, ECOA. The FHA and the ECOA prohibits creditors such as banks from discriminating in home loans or other residential credit transactions on the basis of race, color, national origin, and other characteristics. Now, that's very funny that they put that in court paperwork when we have documented information that shows the contrary. That the FHA teamed up, and I know it wasn't the Fair Housing Act, it was the Federal Housing Administration. They're only using FHA as it pertains to this suit for the Fair Housing Act. But the Federal Housing Administration, not to be confused with the Fair Housing Act, teamed up with the HOLC to literally prohibit prohibit and discriminate based on race, color, national origin. They literally discriminated, and they teamed up with the government. The government even went as far as to create an agency to generate maps where they are able to discriminate. They teamed up with it, and it was headed by the president. I mean, you can't even make this up. You can't even make this up. But point three on the case here, redlining is one type of discrimination prohibited under the FHA and ECOA. Redlining occurs when lenders deny or discourage applications or avoid providing loans and other credit services in neighborhoods based on race, color, or national origin. You see where that article that we just talked about said poor? That's not what they say here on the United States government versus Ameris Bank. They don't mention poor here at all. They say based on race, color, which is pretty much the same thing, or national origin. This is all based on a type of person's color. They don't say anything about poor. Poor is not mentioned in this lawsuit. It says redlining is a type of discrimination based on race, color, or national origin. Redlining occurs when lenders deny or discourage applications or avoid providing loans, which is usually avoidance, and other credit services in neighborhoods based on race, color, or national origin. But you see how they kind of tried to cuten it up on that previous article and say it was based on wealth and poor. No, it was based on race, color, and national origin. It's right here in the court documents. This is the courts. And this took place in 2023. So this just happened. You see right here at the top, October 19th, 2023. Here's the case docket. So I come with receipts. I come with receipts. All right, point four. And I'm not sure if we'll go through all 22 pages. I know I can be long winded, but I'm very passionate when it comes to these types of situations, as I've been a mortgage loan officer for well over 14 years, well over 10 years. But it's 2025 and doing it since 2011. So, very passionate about this because there's been times where I feel like I've indirectly practiced or helped be an arm of these types of practices indirectly, not even knowing. But as I start to do more digging and research, I find out that these are practices I'm not at all comfortable with. And I'm vulnerable enough and mature enough to know that you got to point it out wrong. See something, say something. So we're pointing this out. But from 2016 to 2021, this is in quotations, the relevant time period, even though we got to go back to 1933 if we're going to be real. Court docket. What is this? The United States District Court, Middle District of Florida, Jacksonville Division. No, y'all been doing this since 1937, according to the homeownership loan corporation and the maps they set up. But we'll roll with you right now. From 2016 to 2021, Ameris Bank engaged in a pattern or practice of unlawful redlining. As alleged in the detail herein, Ameris avoided providing home loans and other mortgage services in majority Black and Hispanic neighborhoods in the bank's self designated assessment area in Jacksonville, Florida. It was called the Jacksonville Assessment Area, which we just went over these residential security maps. Where so Ameris Bank didn't designate this like they're saying in the court. No. The government agency called the Homeownership Loan Corporation designated these areas. That's where the foundations of this comes from. And Ameris Bank is just doing what back in the day they partnered up with the Homeownership Loan Corporation to do. Them along with FHA partnered up to do this. So they're just furthering the practices. But anyway, let's go back to it. Ameris's redlining practices included locating and maintaining nearly all of its branch locations in majority white neighborhoods in the bank's Jacksonville assessment area. The bank's mortgage loan officers also targeted majority white areas to generate loan applications and avoid marketing, advertising, and outreach in majority Black and Hispanic areas. Man, so where are my Moncrief folks at? My Dunn Avenue folks, my Lim Turner folks, my Trout River folks. Do y'all see any mortgage billboards in your area? Any banks advertising low mortgage rates, low home purchases, new development? Do you see any of that when you go down Dunn Avenue? Do y'all see any of that when you go down Lim Turner? Do y'all see any of that when you go down Trout River? What about when you go down 8th Street, 45th Street? Anything that can even provide you guidance on how to get a mortgage. You might see on a bus stop here or there some realtor with their phone number and a picture of them sitting there. You may see that, but half the time when you tap into that, their number probably don't work, or they doing real estate for these banks. Oh, and we gonna get to the other cities. Make no mistake, we going city to city. We going city to city, but we starting with Duval. We going city to city. But and there's plenty of other court cases we gonna be able to reference. Trust and believe. There's plenty of court cases we gonna be able to reference because this is something that's been going on for over 100 years. This didn't start in 2016, like this says. You think that 2016, the first time Ameris Bank did this? Do you think that that's the case? The first time they did this was in 2016. No, this is the first time they're getting caught for this, which means they've been doing it a long time. For them to actually bring a bank to justice, and I use air quotes with that, that mean they've been doing it. They so flagrant they had to take them to court. That's how flagrant they've been. It's like a flagrant foul in basketball. This is flagrant foul. Matter of fact, let's pause this real because I bet y'all didn't know that you can do this. All right, there's a site called the NMLS, and you can look up any regulatory activities or actions that the government or the CFPB has handed out to any bank or individual. You know, so I'm here to be constructive. I hope so far this has been constructive. I know I can be a bit long-winded, but let's see if Ameris Bank even has any regulatory actions against them, which they should, since went to court for this. They should. But let's see if it's been reported to the NMLS. Let's take a peek here and see. All right, because I like to check stuff like that out because um, certain entities seem to get away with stuff that they shouldn't. Let's see what they're. And hold on, let me share. I'm going to share my screen with y'all so y'all can actually see. So y'all can actually see how to do this. Okay, so what you'll want to do when you're doing this is what you'll want to do. All right, here's the website here, nmlsconsumeraccess.org. Okay, so you enter in the name of the bank or the name of the loan officer you want to look up, and or you can enter in their NMLS ID. So, like for instance, I'm sharing this tab. I'll get back to it. So, Ameris Bank NMLS ID, and that stands for the Nationwide Multi-State Licensing System, NMLS. You see. All right. And it's free. You can look at it. There's nothing here. All right. You see theirs is 408 408099. So let's check them out and see if they got any regulatory actions. 408099. Was that right? All right. And then you just type in like this. Too many to display. Okay. So you hit company because we just want to look at the company. And boom, Ameris Bank. There you go. All right. And there should be a little, yeah, right here, regulatory actions. None. Uh, none. Now, this says regulatory action are reported administrative or enforcement actions taken by an agency in connection with a person or entity that is engaging in a business activity that is regulated by the agency. Redlining is regulated by the agency, 100%. So palms must have been greased to not have any regulatory, none posted. Well, how is that not posted? How is it not posted? How is it? How do they have any posted? This is interesting to me. This is the NMLS. And it says for Ameris Bank, right? Ameris Bank NMLS. This is on their website. This is what it shows. This is what their website shows. It shows that that is their NMLS. That's crazy to me that they wouldn't have any regulatory actions. But let's go on back to the case, the complaint case against them. All right, because I find this quite interesting here. I have a complaint case, but no regulatory action. That should have been reported. That should have been reported. That should have been reported. That's very, very interesting. All right, so to number 5, Ameris's redlining practices included locating and maintaining nearly all of its branch locations in majority white neighborhoods in the bank's Jacksonville assessment area. The green areas that the HOLC designated. and Ameris is using. Let's keep it real. They didn't create their own. But another topic for another day, I guess. The bank's mortgage loan officers also targeted majority white areas to generate loan applications. Yeah, I went over that. So I know some people may be wanting to know, like, how is that important? Why is that important? So they generated loan applications in white side of town. Okay, what's the big deal? So the big deal is when you're targeting, because I've worked with gentlemen who have done this. I've worked for Fortune 500. I've sat next to plenty of millionaires and high income earners, and a lot of them will only do mortgages for affluent people. They'll only do the mortgages for them. They won't even call the ones who are not in affluent areas. Matter of fact, I've had some that would get frustrated with me for working with those who need more assistance, need more relief. And that's what drove me to kind of go to different companies to work for. Then you kind of find out that you got jerks like that at every one of them. It's just that I was at a particular entity where I was in a department where almost all of them were jerks like that. It's very, very, very unfortunate, very non-constructive. It added a lot of stress to my life. It did add a lot of dollars in my bank account, but I missed a lot of opportunities because I wanted to be above board and not do this. Because this is going on at more banks than Ameris. Trust and believe, where they're only sending out marketing to, because they get paid. We're mortgage loan officers are paid on commission, salary plus commission, but many of them are commission only. So you get paid based on the size of the dollar amount of the home. So where are the higher dollar amounts? They're in the green areas, the ones designated green. They're not in the hazardous areas. So where are you going to be sending your business cards to? Where are you going to be sending your emails to? Where are you going to be sending your flyers to? You're going to be sending them to the green areas because they got the $1 million homes. They got the $750,000 homes. They got the higher homes. They have the better credit profile. So you're sending them there, but that is redlining. You're supposed to be sending that to everybody where you're licensed at. And if you're sending them out, you shouldn't be sending out 1,000 flyers to the green areas and zero to the red area. Why do they not get a shot at whatever new first time home buyer programs out there? Why would they not get that same opportunity? Because what you'll find out, which I did in the industry, is that those are the ones who will actually answer the phone. Those are the ones who will actually send the tax returns, send the pay stubs. Those are the ones who will actually work with you when you decide or when you decline or reject their profile. They'll actually call you and be working with you. The ones in the affluent areas, if you tell them they don't qualify, they're going to cuss you out. They're going to try to get you fired if possible, because the nerve of you to tell them that they don't qualify, even though some of them don't qualify. Just because you have money in the bank doesn't mean your credit's good. You got 12 cars outside and 2 boats, and you might not have it like that. Yeah, you can have all these trinkets and toys, but that doesn't mean you can get another $1 million house. I've denied millionaires before. Happens. I've denied those that making 500,000 when your monthly expenses are 80 grand a month. You might not qualify for another house. You might not qualify for a refinance of that house. A lot of times that's when they start reaching out to you, when their credit utilization's got so high they want to refinance, and they find that it's not as easy as they thought it would be. Not as easy as it was when they got that house, because they have folks like these mortgage loan officers at a Ameris Bank advertising to them because they're in the green area. But further, although the bank knew about its increased redlining in Jacksonville, increased. Like I said, it's been going rampant. Ameris failed to take adequate corrective action to ensure that the bank provided equal access to majority Black and Hispanic communities. As a result of these practices, the bank generated disproportionately low number of loan applications and home loans from majority Black neighborhoods in Jacksonville. And they say compared to their other lenders, and I don't know. I guess they're making Ameris Bank fall on the sword, because I'm not so sure that everybody else is abiding by the rules and the big bad Ameris Bank was the only one not doing it. Don't know about that. I mean, this is what the court document says. So we're gonna take it at its word. But according to this, compared to their other lenders, they were doing it the most. That's what it says here. Now, Ameris conduct and practices were intended to deny and had the effect of denying equal access to home loans of residents of majority black and Hispanic neighborhoods and the bank's Jacksonville assessment area, and those seeking credit for properties located in those neighborhoods, and otherwise discourage those individuals from applying for home loans on the basis of race, color, or national origin of the residents of majority black and Hispanic neighborhoods. Notice they still haven't said poor. They haven't said poor, because the redlining wasn't targeting the poor. It was targeting the blacks. It wasn't targeting the poor. So that's why I took a little issue with that article saying, they've had a war against the poor. No, it's not a war against the poor. No, it's not. These areas became poor because of redlining in 1933. That's why they became poor areas. And I'm gonna do a broadcast on the Sugar Hill neighborhood so folks can see that that was not some poor, destitute type of neighborhood in Jacksonville. And all my Duval natives they can back me up on this. They can back me. I know all about Duval County. They can back me up on this. That was not a poor, destitute, hazardous area. No, they drew a red line and denied, just like this court case says here, they denied them access to relief on their home loans based on race, color, and national origin, not based on poor because they weren't poor. They became poor because they didn't get the relief through the FHA loans that they were getting in the other communities. They didn't get that relief. So we have to be honest about here and we have to be transparent. It's not about who's right and wrong, it's about the truth. The bank's conducted excuse me, the bank's conduct was not justified by a business necessity and it was not necessary to achieve a substantial, legitimate, non-discriminatory interest. So their conduct had nothing to do with what was best for the business, which why would discriminating ever be what's best for the business? But I guess what they're trying to say is it wasn't like there was some sort of relief program where people in those areas just didn't take advantage of it. It's that it was targeted, that they were, and like it said, avoidance. They avoided those areas. Because I've worked with gentlemen and some ladies that they avoid dealing with folks who are in those hazardous areas. They won't call them back. They really are reluctant to pull their credit. They're reluctant to work with them. And this is my experience firsthand. And as you see here on point six, they're talking about where they discouraged them from looking at homes in that area. That's on the realtor side. Because the mortgage guy, the mortgage woman, they can't tell you where to look for a house. They can just tell you how much you're approved for. The realtors are the ones doing that part. The appraisers and the realtors are doing that part. And the loan officers are just making sure that they avoid you at all costs to begin with. So I mean, it's a puzzle, a working machine, really, to discriminate on those that they don't see worthy of this. So, point seven, a jurisdiction and venue. This court has subject matter jurisdiction over this action under 28 USC 1331. Because the action arises under the laws of the United States, brings this case to plaintiff. Venue is proper in this court under, and just so folks know, no, I don't work for this entity. I don't. Venue is proper in this court under 28 USC 1391 and the division because a substantial part of events or omissions giving a rise to the claims occurred in district and division. Parties: plaintiff, the United States, brings this action to enforce the provisions of the FHA and ECOA. The FHA and ECOA authorize the Attorney General to bring a civil action in federal district court whenever he has reason to believe that an entity is engaged in a pattern or practice of resistance to full enjoyment of rights secured by the FHA and ECOA. The FHA further authorizes, and again, this FHA is the Fair Housing Act, not the Federal Housing Administration, the Fair Housing Act. So just want to make sure we bring that clarity again. Um, Although the Federal Housing Administration did partner up, but we'll get back to that. The FHA further authorizes the Attorney General to bring suit where the defendant has denied rights to a group of persons and that denial raises an issue of general public importance. Section 42 USC 3614A. Defendant Ameris Bank, a state chartered financial institution headquartered in Atlanta, Georgia, subject to regulatory. It's right here. Regulatory authority. It's right here. It's right here. And they didn't report that to the NMLS. They were subject to regulatory authority of the Federal Deposit Insurance Corporation and the Consumer Financial Protection Bureau, the CFPB. They got regulatory authority. They are subject to that. As of December 31st, 2022, Ameris' total assets were over $25 billion. The bank currently maintains 164 full-service branches and 32 loan production offices across 9 southeastern and mid-Atlantic states. The bank currently operates in 18 branches in Jacksonville. In 2019, Jacksonville was the bank's largest market for residential mortgages by loan dollars. Ameris is subject to the FHA, ECOA, and their respective implementing regulations. So they're subject to regulatory reports. I'm trying to figure out how the NMLS did not get this regulatory action reported. Because as a consumer, that's where you can go for free to see if the banks have any sort of actions against them. You shouldn't have to do the digging like I did. And it was easy for me because I'm in the industry. So I knew where to go looking for stuff. But if you don't know anything about it, your first step should be going to the NMLS Consumer Access website. And this isn't there. This isn't there. This is a problem. That should be there. This just happened in October 19th, 2023 is when this was filed. Right here at the top. They have more than enough time. Trust and believe. If I committed mortgage fraud, the NMLS would post that the next day as a regulatory action against me. But anyways, let's get back to it. The bank currently maintains, where are we at? 14. Ameris is subject to the FHA, ECOA, and respective implementing regulations. Ameris is a creditor within the meaning of ECOA and is engaged in residential real estate related transactions under the Fair Housing Act. All right. Factual allegations. So here's where we want to get to it. Here's where it's supposed to be the good stuff. We'll see if it's good. I know some of this can be boring. Maybe I'm some sort of a nerd because this is always interesting to me. But Ameris's Jacksonville assessment area. So this is their red line. This is where they did some red lining. And this is where we're supposed to have some factual allegations, which is interesting. I thought allegations means it's not fact, but okay. All right. So, as a depository bank, Ameris is subject to the requirements of the Community Reinvestment Act and its enabling regulations, which require that regulated financial institutions serve the credit needs of the communities that they serve. Each bank subject to the CRA is required to self-identify the communities that it serves in the bank's assessment area. Federal regulators look at the bank's assessment area in evaluating whether an institution is meeting the credit needs of the entire community. So you can't just be on Riverside with it. You can't just be over there by the St. John's Town Center with it. You can't just be on Bay Meadows with it. You got to make sure you serving the entire community. That includes Moncrief. That includes Lim Turner. That includes 8th Street. That includes Dunn Avenue. That includes Trout River. Can't be leaving them out the mix. Come on, man. How you gonna leave them out the mix? They need some relief too. They need some mortgage. Come on now. All right. So 17 from 2016 until July 2019, Ameris self-designated CRA assessment area in Jacksonville consisted of three contiguous counties: Clay, Duval, and St. John's. Of course, they are. That makes sense. After a merger in 2019, Ameris explained its assessment areas to include Baker County. Okay. See Exhibit A. All right. In 2019, the assessment area comprised 246 populated tracts and had over 1.4 million residents. All right. According to the data from the United States Census Bureau in 2019, a demographic breakdown of the bank's Jacksonville assessment area was 61.5% non-Hispanic whites, 21.9% Black or African Americans, 9.1% Hispanic or Latina, 3.9% Asian, and 2.9% mixed race. All right. So I do find that interesting that they broke down the non-white Hispanics, but they didn't break down right here if the Hispanic or Latino here were white or black Hispanics, because there is a thing as a black Hispanic. So are they just included in the black or African American? I don't know. See, this is where that race classification stuff can get a little confusing. But a non-white Hispanic is your traditional European style white person. So they're saying that it's 61.5%, which does allow them to hide behind redlining, because they can say, well, the majority of who we're serving is non-white Hispanics, so that's why. But it should look like this, really. And if you ask me, it should be those that need the most help get the most help. I feel that that's the way you should go about it. So those in the hazard zone should get the most relief. That would only make sense. However, they don't do that. So that's very weird. They're helping out the ones, the 61.5% that don't even need help. They're getting the most help. And it's 21 and below, they ain't getting no help. They get nothing. But anyway, the city of Jacksonville is located within Duval County. It's actually the only city in Duval County. That's why it's the biggest city in the United States. But anyways, it contains a majority of the population within the assessment area. The assessment area's Black and Hispanic populations largely reside in Duval County, which is correct. Most of the blacks in that designated Clay, Duval, and St. John's, most of the blacks in that area live in Duval County. They don't live in St. John's in high numbers. They don't live in Clay County in high numbers. They live in Duval County. Duval County, Debangum. That's where they live at. All right. So going back to it, um, the city of Jacksonville is located within Duval County and contains a majority of the population within the assessment area. Yeah, the most of the people in that assessment area will be in Duval County. The assessment area's Black and Hispanic populations largely reside in Duval County, where they account for 38.8% of the county's residents. Which, to be honest, that's a fairly high number compared to other cities. I'm gonna be honest. That's almost 40% of the population is black. So that's a high number. You know, all of the 48 majority Black and Hispanic census tracts within the bank's Jacksonville assessment area are located in Duval County. Makes sense. Most of the majority Black Hispanic tracts in the assessment area are located in and around downtown Jacksonville. That's right, or the north side. Um, Ameris describes this area as the urban core. So they redefined it from hazardous to urban core. I don't even know what that means. The core of the city? Why would the core of the city not be getting the most help? Why would they be underserved? If that's the core of the city, why would they be underserved? Should be serving them well, right? But anyways, Ameris Jacksonville branches are concentrated majority white neighborhoods. I asked earlier to my Duval brethren, you see Ameris Bank on Lim Turner? I don't think I seen no Ameris Bank on Lim Turner. But let's take a look here. During the relevant time period, and now I ain't gonna say some of y'all, all that bank robbing y'all was doing in the 80s and 90s might got something to do with that. And I got a little something to do with that. But that ain't got nothing to do with these red line maps they created. I ain't about to hold you on that. During the relevant time period, Ameris Bank located its branches in the Jacksonville assessment area so as to serve the credit needs of the residents in the majority white neighborhoods and avoid serving the credit needs of the residents in the majority black and Hispanic neighborhoods. They avoided that. They avoided it. And this is in, as they say, from 2016 to 2020. Again, this case was filed October 19th, 2023. Brought to you by the Attorney General from the United States. All right, Ameris currently operates 18 full service branches in its Jacksonville assessment area, which again, that assessment area is Clay County, St. Johns County, and Duval County. Ameris does not have and never has had a branch located in a majority black and Hispanic census tract in its Jacksonville assessment area, even though the majority black and Hispanic census tracts represent nearly 20% of the overall census tracts in the assessment area. Never has. So I stand corrected. It ain't got nothing to do with no bank robbing because they ain't never had it. They've never had a bank. They've never had a bank. See, I asked a question I already knew the answer to. I go to Jacksonville all the time. They never had no Ameris Bank on no Dunn Avenue, Lim Turner, 8th Street, Edgewood. They never had it. Unless it's Edgewood going all the way on the west side. They ain't had one over there neither. I already know the answer to that. They ain't got it. They've been doing this on purpose. They've been doing this on, this is targeted, okay? But anyways, let's get back to the case. In 2019, as a part of the efficiency initiative prior to a merger, see this is where it got uncovered. They were doing some sort of merger, and that's when you got to start rolling out the books. So the company who's merging with you, they got to make sure you're on the up and up. And it may have been some sort of backdoor investigation anyway, just a way to get them to open that book up, books digitally, of course, so they can see what was going on. And they uncovered a whole lot of redlining and discriminating based on race, color, and national origin. That's what we saw. That's what it says on the case. It doesn't say anything about they discriminated based on the poor. It doesn't say anything about that. It doesn't say anything about discriminating based on the poor. It says based on race. This is from the United States. This is from the United States District Court. They didn't put poor in there. That's not what they put in there. One of the branches closed, the downtown branch, which was located within what Ameris referred to as the urban core, which I know where that downtown branch was. It was over there by the landing, if I'm not mistaken, if that's the one they're talking about, because they had a couple over there on Riverside when you go on the other side of the bridge. If and you go down a little bit, I think by San Marco, I think they had a small branch there, but they had a big one right over by the landing where they had the old Bell South is now Everbank. Um, if I'm not mistaken, there was an Ameris Bank over in that section. At least that way, you know how they put the bank on the big skyscrapers, but the whole building ain't the bank. But they had one over there, and I don't believe I've seen it as of late. So I think that's the one they're talking about because that's the downtown area, the landing and all that's downtown. Um, but that's not the urban core. That ain't Dunn Avenue. That ain't Limtron. That ain't 8th Street. You know what I'm talking about? That ain't Edgewood. That ain't Trout River, man. What they talking about, man? What they talking about, man? That ain't New Kings Road, man. What they talking about, man? Man, that's the landing, man. That ain't the man. That ain't that man. They need to stop it. Way anyway. All right. At the time of its closure, the downtown branch was rated one of America's best financial performers of all its branches in the United States. I mean, they kind of talking like they Wells Fargo or something. We gonna get to them. All right. Prior to the closing of the branches, Ameris performed an internal CRA analysis to assess the effect of the branch closures on the bank's CRA score. The CRA score is the FDIC's assessment of Ameris' compliance with the CRA, including the bank's obligation to meet their credit needs of the communities it serves. Ameris determined that both branches closures would have a negative impact on its CRA score. At the time of the analysis and when Ameris closed the branches, Ameris already knew that in prior years the bank had originated zero loans in most of what Ameris calls the urban core. They originated zero loans. All right, so we're sharing that for a second. I just want to make sure that I haven't, forgotten what we came to talk about today. But we're talking about redlining. And in 2023, there's a case where they originated zero loans. So originating a loan is when you just take a loan application for someone to purchase or refinance a house. They didn't take a loan application. They didn't take one loan application. They didn't take one loan application, not one, in a hazardous area that they now call the urban core. They call that area the urban core, and they haven't taken one loan application, not one. How does this even go unnoticed for so many years? They didn't give somebody one opportunity to purchase a house. Zero loan applications. Zero. And Jacksonville is your largest amount of banks that you have. Out of all the banks they have in the country, which is only in the South and Mid-Atlantic, they don't have any banks in the West Coast or in Texas, or they're only in the South and what they call Mid-Atlantic, which is like for Virginia on down here. They didn't take one loan application. That's redlining at its finest. I mean, it's not, I mean, even if they took five, that'd be redlining. But the fact that they got away with zero, they literally did not take one application for anybody that was black or non-white. They didn't take one in those areas. They didn't take one. How do you get away that long without taking one loan application in what they call the urban core, which is otherwise we see here the hazardous area? They didn't take one application here. They didn't take one application. See, that's what we're calling present day racism, present day discrimination. You mean to tell me in these areas right here? Oh no, no, no. Yeah, perfect. They still got this red line right here. You see that? They didn't take one application right here. 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 And I'll tell you why. You see where these are highlighted at? You see this? All right. Let's go take a look at what it looked like today. This is today. 2025 is the map. They didn't take one application right here. You see that? Not one. Zero. It said zero. They didn't take one right here. Zero. These are same spots. They didn't take one. They still avoiding people in 2025. They didn't take one loan application right here. Look at this. They haven't originated one loan in these areas. This is still today. The map is still freaking the same. These are still labeled the hazardous areas. They didn't take any loan applications here. Zero. It literally says in the United States versus Ameris Bank court case, they took zero in these areas that are still got red lines around them. You see that? I thought redlining was banned. I thought it was against the law. How is it that these zones are still being neglected since 1933? That you're denying them mortgage opportunities in 1930, from 1933 to 2025, almost 100 years, and you're still practicing this. And you're still practicing this almost 100 years later. This is Jacksonville. Hold on. No, I don't want to use that color. We're going to use this color, homie. This is Jacksonville today. Y'all know it. This is Jacksonville today. Today. Look at this. Look at this. They didn't take one application. That's sick. That's demonic. That's demonic. That's demonic. And I still need some answers to this here. I might have to see who. I ain't really a fan of snitching and all that, but I need to find out why we ain't got no regulatory. And you took zero. You originated zero, and you got none posted to the NMLS. You originated zero loans. You originated zero loan. How is none no regulatory action? That regulatory action is any spankings you got where they had to regulate against you. This is crazy. This is crazy. So let's take another look here, man, because I'm a little confused. I'm a lot of confused. But let's go on back to this court case because that was what I really wanted to go over today. I'll more than likely be putting out a documentary. It'll be a lot more cleaned up and direct for those who like stuff documentary style. But going back to here, and this is my first time reading this in detail. I've skimmed through it, but the bank had originated zero loans in most of what Ameris calls the urban core. Ameris knew or should have known from its internal CRA, which they 100% should have known, from their internal CRA analysis that its branch closures would further deprive those same communities of equal access to credit services. They knew it, which lets you know how demonic they were operating as. Very non-constructive. They already knew that they were intentionally squeezing those communities that they deem urban core, which we see on the original map is considered hazardous. They already squeezed them out of opportunities. They originated zero loans and then had the nerve to close banks that were even close to that area, because the landing's not that close, but it's probably the closest to those areas. Because if you're living off Dunn Avenue, the landing isn't like down the street. It's not even in the same neighborhood. If you're living off Lim Turner, that's not down the street. Like, it's funny the way they present it, like someone could walk there. Like, even if you got in your car, we're talking about 18 to 20 minutes. So it's not like it's a bank in their neighborhood that they can walk to, or you know what I mean? It's not like that. But anyways, after the branch closures, Ameris did not take any action to increase or supplement its outreach or advertising to the affected communities to ensure it was reaching majority Black and Hispanic communities and serving the credit needs of its entire community, except for one email campaign in 2019. One email campaign. Now, I don't know about y'all. Well, let me finish reading the rest of this sentence. Except for one email campaign in 2019 where Ameris sent emails to already existing customers living in majority Black and Hispanic communities. So I'm gonna unpack that a little bit. I don't know about y'all, but I get emails from banks 24/7. Want to open a credit card, want to open a personal loan, want to open a bank account. They'll email you nonstop. but they somehow only managed to send out one email to those living in the majority black communities that already had accounts with the mirrors. And I'm sure some folks are like, well, if they're so racist or if they're practicing these sorts of discriminatory practices, how do they already have customers? There's a thing called servicing rights. So say I do a loan with Jack's Mortgage Hut. Jack's Mortgage Hut will take my application, they'll originate my application, and then once I close, they'll sell the servicing rights, meaning another bank will buy that mortgage from them, because mortgages are viewed like a t-shirt, like a product, like a commodity. They'll buy that mortgage from Jack's Mortgage Hut because they want to collect that money for you on your behalf. And Jack's Mortgage Hut may not have the capacity to handle all the clients that they actually originate mortgages for, originate and close mortgage applications for. They may not have the capacity. So when they don't, they'll start selling the servicing rights to other entities. Sometimes they sell it to just a servicer, where all they do is service the mortgage portfolio. They'll collect your payments, answer any questions you may have about your mortgage, but they don't do any sort of lending. Sometimes they'll sell your mortgage servicing rights to another bank or lender. And that's how they'll have it, quote unquote, existing customers. But they're forced place customers. They're not always voluntarily a customer. Do I know that to be 100% fact with Ameris? No, I don't. But I'm pretty sure, just with my experience in this industry, that's how they got these customers, at least the majority of them. Anyways, let's go on to point 29. The remaining 16 Ameris branches were not readily accessible to the population living in majority black and Hispanic tracts. All but two of Ameris' branches in Duval County were separated from the most majority black and Hispanic communities by the St. Johns River. So any of y'all don't know about that, there's a town center down called the St. Johns Town Center. But the St. Johns River is from the area I was just telling you. My Jacksonville folks will know exactly what I'm talking about. My Duval County folks will know. But the landing, that's separated by the St. Johns River. So you got Riverside, that's on the other side of the bridge. And then you got the north side, which they're calling the urban core. But St. Johns River runs right through downtown. There's a place called the Landing, where they have a lot of events over there, things like that. That's the stadium for the Jaguars is also right on the other side where Riverside is, or St. Johns River. But all of that, the hub right there is the Landing. That's where the business hub is. All the big skyscrapers you see when you come through Jacksonville. Yes, Jacksonville has skyscrapers. But all those tall buildings you see in their business district, that's at the Landing. There's a toll bridge right there that comes up and down at times, but it's all right there at the Landing. That's why it's called the River City. But the river goes right through the heart of the city, if you will. So any and when they're servicing the people on the other side of St. Johns River, if you're from Jacksonville, you know what that means. They're servicing the affluent, the green area of people, not the hazardous area of people. So at the time of the branch closures today, the two Ameris branches left to serve the entire north and west side of the river in Duval County are located at least 5 miles from the urban core, where most of the majority black and Hispanic neighborhoods are clustered. Like I said, it's about 5 miles, if not more, north of where their location was at downtown. Ameris knew its branches were not serving the credit needs of the majority black and Hispanic areas in Jacksonville, but did not take any steps to address that failure. By concentrating nearly all of its branches in majority white areas in its Jacksonville assessment area, Ameris discouraged residents of majority black and Hispanic areas from applying or obtaining home loans from Ameris, and restricted their access to the bank's credit and mortgage lending services. They restricted that. This is not in 1933. This was in 2023. This is a court case. This isn't some news article from some disgruntled employee just typing stuff up. This is the United States versus Ameris Bank, October 19th, 2023. They originated zero loans to their quote unquote urban core, which we saw on the legend map that that's the hazardous area where they drew a big red line around the majority black areas that we see is still a red line around it today. And they restricted their access in mortgage lending services. They restricted that access from the hazard zones. They're still doing this in 2023. They're still doing it. They're still doing it. And the HOLC laid the foundation for this. They created the maps that they're still using today. They just renaming it. Now they're saying urban core when back then they were calling it hazardous. They were just being blunt with it. Now they're making it like it's a nice thing. Oh, yeah, this is the urban core. Oh, no, this is where they're restricting their access to the bank's credit and mortgage lending service zone. That's what those areas are. That's what they're doing. Ameris relied on mortgage bankers who serve majority white neighborhoods, but not majority black and Hispanic neighborhoods in its Jacksonville assessment areas. They relied on the mortgage bankers. They relied on mortgage bankers who serve majority white neighborhoods and did not serve majority black and Hispanic neighborhoods. During the relevant time period, Ameris' mortgage bankers served the credit needs of majority white neighborhoods, but did not serve the credit needs of majority black and Hispanic neighborhoods in its Jacksonville assessment area. Ameris has a policy or practice of relying primarily on its mortgage bankers to generate residential mortgage loan applications by developing referral services and conducting outreach to build local relationships. As they that means they're using more so mortgage broker type activity. They're doing retail loan officers, which I've done that as well, where you're more than likely going off of referrals, boots on the ground. You're meeting with realtors, meeting with builders to establish a network where they'll refer people to you, which does help redlining. 100% that network helps that. 100%. Builders will only work with certain loan officers because they know those loan officers know what time it is. That's why the retail game, that wasn't for me. I did it when I lived in Atlanta because that wasn't, as big of a deal there. But outside of Atlanta, you don't be in a retail game if you don't look like certain people. Just gonna keep it real. It can be very challenging. But mortgage bankers are not assigned to generate applications from specific geographic areas within Jacksonville assessment area. Ameris Banks Ameris' mortgage bankers have unsupervised discretion to decide where to solicit applications. Remember, I mentioned earlier, they solicit their services in those areas of that are affluent, where they can get a bigger commission. Just so happens that the ones in the hazardous, the D zone, they get overlooked because they can't get as much commission off of them, so they get overlooked, and they'll try to make it that it's a well thing, but that's not what the case is. Because trust me, if they knew that they could originate 100 loans in the hazard area, they would do it in a heartbeat. They would. The bank did not monitor or document where its mortgage bankers developed referral service sources or to whom mortgage bankers distributed marketing or outreach materials related to mortgage lending services to ensure that sources or distributions occurred in all neighborhoods throughout Jacksonville's assessment area. In July 2018, Ameris Compliance Department recommended to the mortgage division that its mortgage bankers build partnerships with local realtors and community partners to improve lending in high minority communities and low and moderate communities, and the mortgage division conduct mortgage banker training. In response to the compliance department's recommendations, Ameris created a CRA mortgage banker position. That's how they were going to fix it, huh? They created a CRA mortgage banker position. Ameris' chief executive officer, their CEO, offered this specialized CRA mortgage banker job to a person who did not apply for or seek out the role. Let me read that again. Maybe I'm Ameris' chief executive officer offered this specialized CRA mortgage banker job to a person who did not apply for it or seek the role, had no banking experience or relevant background knowledge, and no familiarity with or connections to Black or Hispanic neighborhoods in Jacksonville. So, I mean, we're gonna call a spade a spade. So they hire somebody who's not even in mortgage banking, and they're not Black or Hispanic, but that was the person who's going to oversee. That's the person they hired to oversee the CRA. They're the one. Yeah, he was overseeing it all right. He was making sure that they maintained discrimination. He was making sure they maintained that red line. That's why they hired him, to make sure that was somebody. If he ain't got no experience, they could just tell him what to do. And they told him to make sure you maintain that red line, boy. You maintain that red line. Don't you get this out here lending and giving relief to people in the hazard zone? Y'all remember that article we showed earlier? The goal was to get intelligent Caucasians. That was in the article, supported by the FHA. That was in the article. The goal was to get intelligent Caucasians $1 million wealth and opportunities. That was the goal in 1937. So they got to make sure they still sticking to what they laid the foundation to back in the day. That's why they hired this person. The CEO hired him. He offered the job. The CEO offered the job to a person who didn't even apply for the job. And they're the ones that's supposed to tidy up things. Yeah, they were tidying it up all right. They were tidying up redlining. That's what they were tidying up. All right. So during his approximately 1 year and 7 months in a row, the CRA mortgage banker did not originate a single loan, nor did he perform any outreach or distribute any marketing materials to majority Black and Hispanic communities. In or around March 20th, the CRA mortgage banker was transitioned to an internal lending role. Of course, he was. You go a whole year without originating any loans, bro. No, sir. No, sir. Right? I don't even know how you made it 6 months and nobody said or did nothing. But I mean, what do you expect from someone who has zero experience in mortgage banking? You expect them to generate mortgage with what they say that you're supposed to just go out and build referral network. So they don't have a call center type approach here. That's how they keep that redlining going. See, those banks that got the call centers, they're doing it too, make no mistake. But when they're serving you inside leads and you're able to take the calls, most folks, when you're getting fed leads, they're gonna work the leads they're getting. But when you out on the hunt, you're gonna go where you're gonna hunt, where you can hunt at. When you got to go out and generate that, you're going to open houses, you're going to builder conventions and networking events with realtors. The realtors kind of run the show. They got you. They got you when it's like that. So wherever they got opportunities, you have to take that because they're the ones feeding you. But when the bank is generating leads for you, you'll work with what they're giving you. So whenever you see that they only are going out in the field, yeah, they're gonna go after the green zone, the desirable areas. That's what they're gonna do, because that's the quickest way for them to start making money. It can be a little easier, but it is in fact discrimination, and that's mortgage banking violations against ECOA and Fair Housing Act. It's definitely a violation, which runs rampant. As you see, 2023, we're going over the court case right now of Ameris Bank. Redlining case in Jacksonville, Florida, Duval County, 904. Ameris' failure to assign any mortgage bankers to majority Black and Hispanic areas, failure to supervise its mortgage bankers to ensure coverage of the assessment area, and failure to take any meaningful efforts to compensate for its lack of branches or outreach in majority Black and Hispanic neighborhoods was intended to deny and had the effect of denying equal access to home loans for those residing in or seeking credit for properties located in majority Black and Hispanic neighborhoods in its Jacksonville assessment area. Ameris' marketing targeted majority white neighborhoods and avoided majority Black and Hispanic neighborhoods. During the relevant time period, Ameris targeted some advertising efforts to majority white areas, but made no minimal effort to similarly target advertising to majority Black and Hispanic areas. I mean, this is as alleged above. A marriage practice was to rely primarily on its mortgage bankers to conduct outreach and marketing and to solicit applications to the Jacksonville assessment area. During the relevant time period, which we're talking about, I believe it was 2016 to 2019, Ameris' mortgage bankers conducted outreach and marketing to generate loans in majority white neighborhoods, but did not do so or otherwise serve the credit needs of majority Black and Hispanic neighborhoods. Ameris' corporate marketing division advertises across all the bank's markets, focusing on branding and website traffic. During the relevant time period, Ameris' corporate marketing division selected some media channels that reached the entire assessment area, including television, radio, and print. However, Ameris also targeted specific majority white areas within the assessment area, but did not target majority Black and Hispanic tracts. Ameris focused its billboard marketing in white areas. I just mentioned that. Anybody that I know staying on Lim Turner, staying on Dunn, staying off Edgewood. Any of y'all ever seen an Ameris Bank billboard? I bet you ain't seen one. Because in the court document, they said they ain't got one. For example, in 2019, not in 1919, in 2019 and 2020, Ameris placed 6 advertisements on billboards in Jacksonville's assessment area in majority white tracts. Ameris did not advertise on any billboards located in majority Black and Hispanic tracts. Ameris did not advertise on any billboards located in majority Black and Hispanic tracts. Ameris selected the billboard locations based on availability and proximity around branch locations, and a selection process which excluded majority Black and Hispanic neighborhoods, because Ameris does not have and never has had a branch in a majority Black neighborhood. Never. Never. How are they still operating? We'll get back to this court document a little later, but how are they still operating? I mean, this is blatant racism, blatant mortgage discrimination, which is a regulatory action. Equal Credit Opportunity Act is I mean, violation left and right. Anyone who has ever had to obtain your mortgage license, you know, equal credit opportunity violation, you can lose your license for stuff like that. I mean, we're talking about violating giving folks a house. They originated 0 loans. They've never had a branch in a Black neighborhood. I mean, call me crazy. I'm an entrepreneur, but call me crazy. Blacks have the most spending power in the country. Why would you want to bank there? I'll be issuing out credit cards. Call me crazy. I mean, majority white folks are very conservative with their money. So I guess maybe that's why you want banks there, I guess. But if I got folks spending, bruh, I'm lending. If you spending, I'm lending. Call me crazy. But to not originate one loan in the black area, or as they're saying, black and Hispanic area, I just call it non-white. But to not originate one loan, and like we went over earlier, originating is just taking a mortgage application where they go over your income, property, assets, and credit. And they go over income, property, assets, and credit, build your mortgage profile, and that completes your 1003. That's the numerical name of your mortgage application, your uniform residential loan application. They call it an URLA if you're on the banking floor. Um, in order to originate your URLA, they need four pieces: income, property, assets, and credit. The income, they're looking at your debt to income ratios. You ideally want to be below 43%, and that's income versus what's going out. When it comes to property, they're looking at the value of the home and how much equity you'll have in the home, meaning how much you'll put down. And that ratio is called your loan to value ratio. Ideally, they would like for you to put down 20%, but with the housing prices today, 20% is being more and more of a challenge. FHA allows you to do 3.5% down. They have some first time homeowner loans that are conventional where you can do 3% down. However, keep in mind, the less you put down, the more risky you appear on your mortgage profile. So you can get a house with 3%, 3.5% down, but you will look higher risk, especially if you have a higher debt to income ratio. So a lot of times when you see these banks and mortgage loan officers not lend to what they call hazardous, historically has been called hazardous areas, the black areas of town, it's because they have gone through either someone has told them or they've experienced it themselves, not being able to get those type of strong credit profiles. So they rather deal with folks who have the 20%. So 20%, let's be honest. Let's take a look here. Let's take a look here. All right. And this is me just more so going a little off the cuff, but I do want folks to kind of get an understanding of what they're looking at. So let's go on. Let's take a look, right? Average home price, Jacksonville, Florida. All right. Let's see what Copilot got to say. Average Jacksonville metro area is 351,000. All right. So let's look at mortgage calculator. All right. 350, we'll just put 352,000. All right. This is what your payment would be right now, which some folks are having a hard time coming up with that, but let's see what your down payment will be. I mean, I know, but I just want to walk you all through it so you can kind of see it, right? So let's say you're putting down 3.5%, right? 3.5%, and let's say you're at 352,000. All right. You see that right there? It's $80,000. That's $80,000. 20%. That's $80,000 to be a strong buyer. So that's why a lot of those mortgage banks and mortgage brokers and loan officers target the wealthy side of towns, the affluent, because that strong profile needs an $80,000 down payment for someone who's just buying a $350,000 loan. Now imagine they're getting 650,000, right? Imagine 650,000. Let's take a look here. 20% down. You see the math. You see the math. You see the math. See, this is the math right here, man. That's $130,000 down. Yes, I have worked with folks that have 130,000 to put down. But is that your typical buyer? No. Now imagine you getting a $650,000 loan or home and you're putting 3.5% down. That's still $23,000 you'll need plus closing costs. Plus closing costs. plus closing costs, plus closing costs, plus closing costs. So keep that in mind when you're thinking about it. And I'm not saying you should feel any sort of empathy for this disgusting activity, because you shouldn't. You should actually be very upset and demand something be done with this. I'm just saying this is where their mind space is at when they're out there only lending to them. Now, if they had any good sense, which when I was doing this actively, I would rather get 30 loans in the hazardous area, because what folks don't know is there's a lot of military vets that live in these hazardous areas, and they got money, they got stability, they DTI work, they LTV work, they assets work. They usually got three or more checks coming in. So DTI gonna work. They VA eligible. So DTI don't matter that much. But see, them buffoons over here working for them ain't even thinking like that. You know how many military veterans and active duty people live in these hazard areas? Plenty of them. I would get so many VA loans because they live in those areas. They get a VA disability check, some of them. They getting a Social Security disability check. You know what I mean? And they still getting a pension plan on top of that. And some of them still got some sort of job. They might just work at the Lowe's part time. That's four checks coming in. Four checks, and they VA eligible. And if they getting disability, they don't pay a VA funding fee. And VA, you don't have to put a down payment. So if they want to buy a new house using VA, no money down. I can get the seller to pay the closing costs, and they gonna qualify through their income and credit, because to be a vet, typically they're gonna have to have good credit. I mean, well, not to be a vet, to be active duty, they have to have good credit, and a lot of times they maintain that good credit. But they so worried about looking for the CEOs of this and that, and the top executive this and that. You missing all of those folks that live in them areas that's retired military or active duty, and they live in those areas that they deem hazardous. They do. It's plenty of them over there. Trust me, I was at a point in my career where I was closing 19 loans a month. Probably 12 of them was VA or FHA, and I was doing plenty deals in the hazardous areas. So I don't have any empathy for them. Oh, well, they got to get their commission somehow. So I got to go over to the affluent areas or the still desirable areas. No, you don't. It's money in the hazardous community. It's the reason why the number one spending community is in those hazard zones. They got money over there. Does everyone over there have the best credit? No, but everybody in the affluent areas don't have the best credit either. I rejected my fair share of affluent zones, my fair share of them that got 12 BMWs on their credit report, three houses that are underwater and behind and facing foreclosure. I've seen that. I've seen that. They making 400,000 a year, living like they're making 4 million a year. I've seen it. And I've rejected them and got cussed out. Like it's my fault they spending money. So you can run into those problems over there. You can run into those problems anywhere. I've always went above the board. I never it didn't matter to me how you came in, what you look like. I'm going to treat you just the same. We're going to go over your income, property, assets, and credit, discuss your goals, and I'm going to walk you through and hold your hand as far as on the mortgage professional side on how we're going to get you into this house. If it's a refinance, how we can help accomplish your refinancing goals. Especially if you're looking to get financial relief. That's why most people refinance. And for a Ameris Bank to go through this whole period and not originate one refinance, when we're talking about folks who definitely need relief, Florida went through the worst experience when it came to overinflated home values. You mean to tell me nobody was HARP eligible? No one, huh? Because they were still doing HARP in 2016, and you didn't originate one loan, not one. That's disgusting. That is racial discrimination, and that is redlining at its finest. They were avoiding lending and credit opportunities based on race, color, and national origin. Not based on being poor. We're gonna stop that. They didn't say, oh, we're going against the poor. No, they didn't. No, they didn't. They said we're going against the blacks. That's what they said. And that's what they did. And they went to court behind it. The United States Attorney General took them to court behind these redlining practices that Ameris Bank did in Jacksonville County, in Jacksonville, Florida, Duval County, 904. They got some nerve. They got some nerve. I knew it had to be bad when they got taken to court because you don't just take. You know how many of these lending companies and mortgage banks do all kind of heinous practices, and I haven't seen any of them go to court. So for them to be brought before the people, before the court, I knew it had to be disgusting. And this is disgusting to originate. I have worked for mortgage companies that were overtly racist, not just in lending practices to the employees, myself included. Overtly racist in your face while you making them money. And even they originated loans in black neighborhoods. So to originate zero is flagrant. How the kids today is diabolical. That's diabolical work. It's disgusting activity, man. That's terrible to originate zero and it be put in black and white on the United States versus Ameris Bank court case of October 19, 2023. United States District Court, Middle District of Florida, Jacksonville Division. The United States of America versus Ameris Bank. That court docket says they originated zero loans to blacks in 2023. We still doing that? That's disgusting. That is disgusting. Zero loans to banks. I mean, to blacks. Zero loans. No advertisements. And the closest bank, and I cannot believe they really tried this. They tried to say they had a bank location, the downtown one by the landing, the tall skyscraper building. They tried to say that was in the urban core, the black community. They said that location. Let me see if I can show y'all this location. Let me see if I can show y'all this. Yeah, I knew I wasn't tripping. All right. Let's share my screen real quick so y'all can see this hot garbage. The hot garbage. This hot right here. It said this. It said this location was in the black community. Look at this location. It's like it's in the black community to you. See, I know where this is. I've worked downtown Jacksonville before. No, 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 no. This is by the landing. This is not the black community. You see, this is where you park. Right here. The landing is right there. You know what I'm talking about? So this is crazy that they would say that. This is crazy that they would say that. As you even see right here, Jacksonville Landing. I know what I'm talking about. Look, this is in the black community they're talking about. It's disgusting. Disgusting work right here. That's disgusting work. That's disgusting work. That's disgusting. This is I was in the black community. That's downtown Jacksonville. That's not the black. I mean, there is a black side of downtown, like your 45th Street, all that stuff along Main Street is very black, right? Once you get to the landing, once you get right there where the St. John's River is, That's where that transition happens, and you go from the hazard area to the not so hazard area right there. And the further you go south, it can be a little bit better unless you're going south more on the Arlington side. That's underserved area too. Okay, but when you're going by university, JU. But it's just very funny that they tried to like CYA it by saying, yeah, we did. No, that branch, that's right on the river, buddy. You don't get no credit for that. And it ain't like y'all was letting black folks just march in there and take loan applications, because according to the court paperwork, you took zero loan applications. Zero. You originated no loans. You didn't close one loan for anybody in the black communities. You may have done them for black people who lived in those affluent sides of town, but you didn't do them for any blacks that lived in off Dunn Avenue, because that's on the court paperwork. You didn't do it. Not on Lim Turner. No, you didn't. No, you didn't. Not off Edgewood. No, you didn't. You didn't do it. It's right there in black and white. The United States versus Ameris Bank. You didn't do it, and shame on you. Shame on you. Shame on you. So we sowing the seeds of truth here today, man, because this is hot garbage right here. For you to not one, you didn't originate not one. You sent out one email campaign to only to current bank account holders or mortgage holders, really. Didn't lend credit, and you went out of your way and avoided extending any mortgage relief. Any mortgage relief. You avoided extending mortgage relief to those who lived in those black communities. You did that, Ameris Bank, and you should be ashamed of yourself. And we'll resume on the next series of Neighborhood Watch. And next, we'll be going over a whole nother city that all y'all will want to see. But I hope y'all found this constructive. I hope this was information that you can use to build on. If you have any questions or concerns, shoot them over to me. Please spam the comment section. I definitely hope you all found this was of constructive value to you. Stay tuned for the next city on the Neighborhood Watch, because we will be getting into them. And this is a constructive house. My name is Seeds, and I shall see y'all next time.